Tech stocks have had one of their ugliest two-day stretches in months. The Nasdaq dropped over 1% Monday, and then Tuesday, a major Asian market crashed double digits in a single session. Circuit breakers were actually triggered twice, and the sell-off spread globally, hitting the semiconductor sector especially hard. And right in the middle of all of this sits Micron. This is a stock that's been part of our Zen investor portfolio for months, and it has been one of our most successful holdings. Now, Micron reports earnings on June 24th after the close. So in this video, I want to do three things. I want to walk you through what actually caused this sell-off, because the headlines are actually getting it wrong. I want to tell you why I think Micron is actually at the center of one of the most important stories in the market right now. And I'm going to lay out exactly what I'm watching for during the earnings call, because this earnings report isn't just about one stock. It could actually set the tone for the entire AI trade for the rest of the summer. Hi, I'm Jacob Wade. I'm a financial coach for high-income earners that want to retire early. And if you like breakdowns on timely market catalysts just like this one, please give this video a like. Hit that thumbs up button. It helps me a lot. I really appreciate it. Now let's set this scene, because the setup here is unlike anything we've seen in a while. Now, this all started out on Monday. Tech stocks got hit, and the headlines were alarming. But interestingly, semiconductors were actually holding up, showing relative strength even as the broader Nasdaq was getting dragged lower. Now, what exactly was driving Monday's weakness in the market? Well, a couple of things that were working together. Number one is Treasury yields were creeping higher. The 10-year hit up to 4.51%, and when yields rise, the math just works against high growth stocks. And the further out a company's earnings are, the more sensitive the stock is to rate moves. And underneath that, the market was still digesting Kevin Warsh's first Fed meeting the prior Wednesday, a tone that was a little more hawkish than expected, signaling potentially 1 to 2 more rate hikes that could still be coming this year. Now, that kind of uncertainty definitely does not help growth stocks. But none of that explains what happened on Tuesday. And Tuesday is the part I think most people are actually getting wrong, and the headlines are getting wrong. Now, what happened was a major Asian market crashed double digits in a single session. Circuit breakers were triggered twice, and this time semiconductors were right at the center of it. So reports surfaced that a major Korean chip maker was slowing its expansion of next generation memory chips. And that was enough to spook a market that had run 90% in a year just on AI chip enthusiasm alone. So the selling started, the circuit breakers kicked in, and the panic spread globally, hitting Micron, SanDisk, and the entire memory chip complex here in the US hard. 2 days, 2 completely different stories for semiconductors. And if you only read the headlines, you're actually going to draw the wrong conclusions about what it actually means. And by the way, this is exactly the type of topic our editor-in-chief, Steve Reitmeister, discusses in detail during his live training sessions on Mondays. To ensure that you stay up to date on what's going on in the market, I suggest you join the next one. It's free. Just sign up at WallStreetZen.com/live or scan the QR code on the screen right here. The next one is Monday at 7 p.m. Eastern Time. So now this all brings me to Micron itself, and why the upcoming earnings report is about a lot more than just this one stock. So if you've been following our videos or our newsletter, we've been saying for a long time that Micron is the picks and shovels play in AI. Memory is not optional. You can't run AI at scale without it. Every AI server, every data center, every inference workload requires massive amounts of high bandwidth memory. Micron is one of only a handful of companies in the entire world that can supply it at scale. That isn't a narrative, that's a supply chain reality. And earlier this week, that thesis got a big validation. Micron announced a partnership with Anthropic, one of the world's leading AI labs, becoming their primary memory and storage supplier. On Monday, while the Nasdaq was getting dragged lower, Micron actually closed at an all-time high. It was up nearly 7% on the day. But then Tuesday happened. The stock fell 10%, giving back all of Monday's gains and then some. And here's the detail that most people missed about why Tuesday was so violent. South Korea had recently approved 16 of them, single stock leveraged ETFs. This is 2x bets on Samsung and SK Hynix. And when those stocks started falling, the leverage actually amplified the losses dramatically, which is why the circuit breakers triggered twice and panic spread globally straight into Micron and the entire memory chip complex over here in the US. So ask yourself, was this a fundamental change in the AI memory story? I personally don't think so. And then Dave Ives at Wedbush even came out Tuesday and said, hey, buy the dip. Investors are missing the bigger picture here, and I totally agree. What changed on Tuesday is that a market running on leverage had an excuse to unwind. That's a technical event, not a fundamental one. So now we have a stock that hit an all-time high and then dropped rapidly. And now earnings are on the horizon. Now, Wall Street is expecting revenue up over 270% from a year ago and earnings up over 900% year over year. The bar is really high, but this company has been clearing it with room to spare. So what I'm watching isn't just the headline numbers, it's what management says about HBM demand going into the second half of the year. It's pricing power. It's whether the supply constraints driving this story are actually still intact. That's where the real signal is going to be, and not just for Micron, but for the entire AI infrastructure trade. And by the way, if you're gaining any value from this video, please hit the subscribe button below and hit that notification bell. We release videos like this frequently, and it's the best way to ensure that you don't miss out on the next one. So what do you do with all this information right now? Before the results drop, here are 3 things. First, you need to know what you own. In our Zen ratings system, Micron earns an overall A grade, a strong buy recommendation, one that it's held for a long time. But each Zen rating is composed of 7 component grades, and it's worth noting that Micron has consistently scored weakly in the safety component grade. Now, that's not a reason to sell, it's a reason to go in with your eyes open. A stock up this much already going into a high stakes earning report carries real risk, and the Zen ratings have been flagging that all along. Our Zen Investor Editor-in-Chief actually sent a note to subscribers this week with updated trade triggers for this position specifically. His message: have a plan before emotions take over. As he put it, it would be insane to complain about the stock's performance, which has been very impressive even despite the last few days. But it would be equally insane to ignore your triggers in hopes of higher prices, only to watch those gains fritter away. The second thing here is to just zoom out. If the earnings go badly, remember that Micron is not the only stock out there. A diversified portfolio is what keeps a bad earnings report from becoming a bad year. Micron is a great stock. It shouldn't be your whole hand. And third, consider where the market is actually showing strength right now. Well, chip stocks are getting hammered this week. The Dow was up. Small caps held up. Value stocks actually quietly did their job. The rotation we've been talking about for months out of the crowded mega cap tech and into undervalued, under-owned names, this may be accelerating. And if you've been meaning to diversify away from the AI trade, this week just made the conversation a lot easier to have with yourself. And again, if you want a starting point in that process, be sure to join our live training sessions every Monday at 7 p.m. Eastern. Not only will you get an overall pulse of the market, but you'll get actionable investing ideas with our Editor-in-Chief's Trade of the Week. Now, if you ask me personally, a high conviction stock from a 40-year investing veteran is worth it alone, and it's free to attend. You do have to reserve a spot though, so just go to wallstreetzen.com/live or scan the QR code on the screen right here and grab your spot right now. Now look, weeks like this one are uncomfortable. 2 days of red, alarming headlines, a stock you believe in gets hit hard right before one of the most important earnings reports it's ever had. Nobody enjoys that. But I would like to hear from you. What do you think of the overall tech sell-off? Are you a Micron shareholder? Are you holding steady, or are you choosing to take profits right now? Just drop a comment below. We read every single one. And if you liked this video, you're certainly going to like another video about how we don't think the Meg 7 rotation is done and exactly what area of the market we think is poised to benefit. It's on the screen right now. You can just click right here to check it out.